Welcome back from the ad break, return learners. Before the ad break, we were dealing with internal controls. Now I'm going to introduce you to GAAP principles. GAAP principles. Let's quickly go over it. The definition of GAAP. The GAAP principles, the word GAAP, this is an abbreviation which stands for the Generally Accepted Accounting Practices. All right? What is GAAP? It is a framework of guidelines for financial accounting. I'm going to keep explaining. It's going to get lighter as we go. It is standards and procedures to be followed in the preparation of financial statements. So in accounting, when we prepare what we call financial statements, there has to be standards and procedures that we use when we are preparing our financial statements. That is what we call GAAP. Now, these are standards and rules that accountants follow in recording transactions. So we just don't record transactions as we want, but there are standards as well as rules that must be followed by accountants in recording transactions. GAAP principles. We are going to look at a number of principles that relate to GAAP. To start with, I have number one. Number one, I know you're taking notes. Please write the first one as matching concept. Matching concept. What is the matching concept? It states that expenses that are linked to the income that it has helped to earn should be recorded in the same accounting period, even if the income has not yet been received or expenses have not yet been paid. That is the matching principle. Expenses that are linked to the income it has helped to earn should be recorded in the same accounting period. That is your matching concept. I'm going to go on to the next one, which is the business entity concept. It states that the accounting for a business should be kept separate from the personal affairs of its owner. In other words, the affairs of the business must not mix with the affairs of the owner. All right? I'm going to show you an example as we continue. The third one, the prudence concept. It states that accountants should be conservative. The word conservative is very important in defining the prudence concept. Accountants should be conservative when preparing the financial statements. It simply means when accountants are preparing financial statements, they must not be recording too much income that is being conservative. They must not be anticipating very high profits, but they must be conservative. That is the prudence concept. I also have activities that I'm going to do with you in line with the prudence concept. The next one is the historical cost concept. It states that assets must be recorded at their original cost price in the books of the business. What it simply means is when we buy an asset in the previous years, the cost that we've paid for that asset is what we should always record the asset in the business books. Historical cost. Whatever we paid back in history is what should be reflected in the business books. The next one is what we call the materiality concept. Accountants must include meaningful information in the financial statements. That is, less meaningful information should be excluded. Only information which is meaningful, which helps a business to make decisions, should be included in the financial statements. And anything else that is less meaningful should then be excluded. I'm going to go on now to the going concern concept, which says that a business will continue to operate in the foreseeable future. What does that mean? It means when we are preparing our statements, when we are doing business, we are doing business with the idea that our business should continue to operate. That means our business should be there in the next year, in the next few years. Going concern concept. All right, I have an activity that I want to do with you here. With me here, dear great learners, is an example that I want us to do together. And it reads, Harry, the owner of Delta Traders, has bought his wife a car for her birthday using the business bank account. All right, using the business bank account. This is very important. And has recorded it as a vehicle in the business books. So the vehicle has been bought for his wife, but then it was bought using the business bank account, and it has also been recorded as a vehicle in the business books. Rajesh, the bookkeeper, has told him that what he has done is unacceptable. You have to understand that Rajesh in this case is very correct. Then why would Rajesh say that when Harry owns the business? Earlier on, I introduced you to some GAAP principles. If you still remember, I introduced you to matching concept. I went on to the business entity concept. I went on to the prudence concept. I touched the historical cost concept. I touched the materiality concept as well as the going concern concept. Which of these 6 concepts is Harry going against? I'm going to quickly help you with the solution. I know most of you already have an idea, all right? Now, here is the solution. Harry is acting against the business entity concept, all right? Why would we say the business entity concept? Because the concept states that the accounting for a business, okay, the transactions for a business or the books of the business should be kept separate from the affairs of the owner. In other words, when Harry bought the car, he should not have used the business bank account, and he should not have recorded the vehicle in the books of the business. His personal affairs should be kept separate from the affairs of his business. And then Harry has bought a car for his wife. This is a personal transaction, as I've just said. Recording this transaction in the books of the business is wrong, as it goes against the business entity concept. Dear learners, thank you so much for joining me in today's class. I hope to see you again soon. Please take good care and cheers. Goodbye.